So good afternoon now. For the Forex Sales Pro group, I wanted to show you again this image that I posted in the other group before, but I think not a lot have catch this thing. There was too many things going on. So this channel to me looks really, really important. It's a big, long channel starting in 2008. And like 15 years ago, really a long time ago, that's where we are. It's a weekly channel that I draw here, and it's a Fib channel. That's why you have the Fib in the middle. I use Fib everywhere, as you know. So first thing to point out here is how this channel has been working very, very nicely. We can see here, look there, here, in many occasions here, we have been struggling. This bottom again, this is the bottom of the channel, but it's completely in line with those three bottom are aligned. Here we have bottoms, you are struggling on this 76.40. Here, look how well we have been playing the 50% area, which is really looking important here. You see there already in 2013, 10 years ago. Same thing here. And you see how this other area, the 21.40, 23.60 area has been working very well. So it's something important I wanted to show you. The first thing I want to go in now, inside in details, is this one. So what I did here is something I do a lot, which is I use inside Fib channel, inside a big Fib channel. So like this one here. So let me put it a little bit better. Okay. So we have it here. And if we look at that on a smaller time frame, what we see there is that yesterday lows right there was right on the 38.20 Fib of that inside Fib channel. So it's nice because usually, like all the Fibs, normally it says as soon as we respect something higher than the 61.8, and if it's the 38.2, it's even stronger, we keep on with the original trend that was before this pullback. This is the original trend. This is the pullback for now, and we are sitting on the 38.2. And if you look more in detail inside there, you will see how important it is to have everything ready. You see we stopped to the pip on this inside 23.60 Fib. So I cannot put extended on the right here, but it's to 21.40, 23.60 Fib. So you see how well it played and how well it has been holding on the 38.2. So that's very important because we are arriving back on this big Fib. This is the big Fib of the big channel, and it's the 50%. We broke through it, touched the one-to-one extension here of an inside extension, ABC, and we came back to the 38.2. Now we are trying to bounce from it, and that's where we did the call yesterday, which has been working quite well as a long call. And we are there. So it's important to see what happens. I know we have FOMC tomorrow, but this is something I will use inside or after the FOMC, more after, because I will probably do nothing inside the FOMC. But after, to see where we broke up, or if we went down a little more up to where we went down. So we have those level and other level, but that's quite medium-term level because you see there is some space in between each of them, and that's giving us some good information of what we can use as support or resistances for the next move. The other thing which is important to point here, after zooming in like we did now, we zoom out again. And the other thing I wanted to show you is the following. We have here the big ABC up which is giving us this 61.8 Fib here. So I will draw it quickly there. It's the big ABC I've been speaking for months now. And if it wants, let me take off this, that will be faster. It will not be very precise, but it's there at least. So this big ABC is the one that has the 61.8 here. And you see in this case, well, we can draw it better, of course, but in this case, look how this confluence with the 61.8 and the 88.60 Fib of this Fib was a boom upside, a really big boom upside. It's a big weekly chart. So this move here is 2,200 pips. So that's not something small even for EURUSD. So you see how even this confluence here, the price has been sliding, and then when it comes to the confluence with the 50% and the 50% Fib of the channel, boom, we went up again. Then we define another top, and then we broke through it. The only thing I wanted to show you is, it is the scenario 2 of the video that I posted for the quarterly close on the 1st of October. If for any reason, which is not my actual scenario, but if for any reason we would break back under the 61.8 here Fib and enter in this area, this is the 0.90. I already spoke about that thousands of times, but this is the big 0.90 area where we would have another monster confluence to see a big bounce on the EURUSD. In that case, we would come back to this 50%, which would be 108 something. I don't think we will do that now. I think we can go lower because we stop on the 61.8 of this Fib, of this channel, sorry. So it's a kind of half training and half update video, because you already see this video. So this area would be really very important. And now if we look a little bit at the channel in a weekly or even a daily chart, you see this is the 61.8. This is the big 50% that we need to break back above to see a continuation. As soon as we would be there, we would probably stay under it, probably struggle a little bit here, or just fly, depending on what would send EURUSD in that area. The next big thing would be 105.43, but it's far away for now. And as I say, the target for this year for me is 110 to 112. So it's about more or less this 1 to 72 or a little bit higher extension. Sorry, 110 to 112, it's not there, it's there. So this is what I think we could get before the end of the year. I'm confusing with 110. So this is where we would go, and we have exactly there this Fib, which is the 50% here. 50%, 38.2, so 23.60, 21.40 Fib, and you see that's exactly where we go. If we would go there, which is the area of confluence, then we see the other thing I wanted to point out is if we would go there, we would arrive in this big support area, which is the lows of the EURUSD. One more time, I think, because of many things I already explained, that we should look up from now, and because of the US economy, anyway, always ready for something lower. So same thing here. If we would have a big move on the FOMC, which I don't think will happen, but if we would, we have some big support and resistances on the upside, and it's always good when we start the week and when we start a period of trading to always look where we are inside on the big picture, and then zoom in again on a smaller picture.